joined now by Philip Poole of HSBC Global Management. Thank you for joining us today. Tell us a little bit about Russia and why you feel that it is unloved and undervalued.
Well, certainly from a valuation perspective, we think it's very cheap. It's trading on a PE of less than 6 relative to 5-year historical average of closer to 9. And on a price-to-book basis, it's sort of just over 1, really. So in relation to any of the other BRICS markets, it looks cheap. In relation to its own history, it looks cheap. And we think, actually, there's a very good story which is somewhat overlooked in Russia, the consumption story.
So it's all about consumers, really, is it?
Well, it's not all about consumers. Obviously, the commodity part of Russia is very important. The index is dominated by commodity stocks, but there is a very important and an interesting consumption story, which we think has got legs.
And that's the kind of rise of the Russian middle classes, is it?
It's partly that. It's also based on the fact that dollar incomes generally have been rising quite rapidly. It's based on the fact that there'll be a big consolidation coming up in the retail sector. It's very fragmented at the moment, so we think there can be some substantial winners there. And in general, really, we're looking for consumption to be the key driver in emerging markets, as these economies are almost forced, in a sense, to change their growth models and become less dependent on the developed world.
Now, you've raised the sector, the Russian sector, over India. Is that right, at the expense of India?
Yeah, absolutely. Obviously, you have to allocate across the different markets. So in our BRICS fund at the moment, yes, Russia is our big overweight. India is trading broadly in line with its 5-year averages, so it doesn't look expensive, very expensive. It looks fair value, I would say. But Russia, relative to India, is the bet that we have on.
Now, there are obviously downsides with Russia. It was hit very hard in the financial crisis. There's a political risk there. And the government's also still spending a lot of money. Do those things concern you? They
do, of course they do. And, making a bet on a market's never straightforward. If anything, the macro indicators are getting a little bit worse, I would say. But that's in line with what's going on globally. We're seeing softer data coming through. There is a concern, as you mentioned, about fiscal performance. That's more of a medium-term issue, though, I think. And, of course, the transparency issues are still there. What I would say is that Russia will always trade, or at least for the foreseeable future, structurally undervalued relative to its potential. It's just that we think that is too extreme at the moment.
And when you look at it compared with the other BRICS, so looking at Brazil, looking at China, which has got some issues with a slowdown now, you're still confident that actually that is where the best value is going to be from Russia?
Yes, given the starting point of the valuation, we're also pretty positive on commodity prices, actually. I think the medium-term commodity story is very favourable. Again, if you look at the drivers from the demand side, it's emerging markets coming off very low per capita consumption base, rapidly growing populous countries like China. So I think there's a good demand side story for commodities, which, of course, will be a big benefit for Russia as well.
Philip Poole of HSBC Global Management, thanks very much indeed for joining us today.